Okay, well, on that note, let's get underway. So, obviously, this is not professional specialist in terms of advice for your personal situation. You should always get financial, tax, or other advice from a specialist. That's our standard disclaimer. If you've got questions, could you please put them in the Q&A box? Let me just check. Yeah, we've got a Q&A box. So just use that if you can. It's just easier than the chat box. And always you can comment in the chat or things like that when I ask you. And again, look, if you put the question in the chat and I see it, I'll answer it. There's just a chance I'll miss it if there's a lot of chat. So I generally say to people, put it in the Q&A box if you can. It just makes it easier to find it. Okay. So what you'll learn today is why this current crypto boom is different. So I'm going to do a few crypto comments. And fortunately, not because I'm any smart guy in cryptos, and I really don't claim that. Some of you would probably be much better than me. But I've got smart clients who've made many, many millions. Like literally, my story with cryptos is quite funny, which I'll be telling you very shortly, and then you'll see why, where let's just say I will embarrassingly admit I thought it was the biggest scam ever seen on planet Earth at one stage. So basically what you're dealing with the taxes and how this works and why it's so important that if you haven't addressed this, to get onto it now, especially if you've got cryptos and you haven't. My experience is that someone asked me what I thought about cryptos a little while ago. And I said, because I used to work for the tax office, I said, if I was the Australian government, I would think we have got the biggest payday on planet Earth coming the next 2 or 3 years of crypto audits. Because from my experience, most people got into cryptos because they don't particularly like government regulation. And they kind of had this idea that cryptos was private. And generally, crypto investors, because it's difficult to open trust or foundation or company accounts, are the worst structured investors of anything that I know. So if I was the ATO's advisor, which fortunately for you, I'm not, I'd be saying you guys are about to have the time of your life in the next few years, and you're going to clean up on audits and you'll be able to hit penalties and have the time of your life. And so this webinar is to kind of help you not be those people who kind of is here because you're a little bit nervous because you know that you could be structured better with your cryptos. Just type a Y or raise your hand if that's why you're here, because you're like, yeah, I've got to sort this shit out so that I don't become the ATO's milk cow. Yeah, so my experience is that the ATO is going to have a lot of fun in the days ahead with this, and already they're starting to send letters and do all kinds of stuff with AI and automated stuff. So yeah, you really do want to get onto this and have this absolutely nailed. So I'm going to be giving some tips on how to legally deal with your crypto taxes, what the ATO can't so easily stop, and protecting them moving forward. And fortunately with me, who here has found most accountants and lawyers know jack shit about cryptos? And that's kind of why you've come to listen to me. Just type a Y. And they don't, because it's not easy to understand. I only understand it because I'm a bit fucked in the head myself, excuse the French. In other words, I'm a bit out there. I like to try new things. And I got caught into this not because I was a smart guy, but because I had smart clients who made me realize that my view of the world was wrong. And so I know a lot about cryptos compared to most tax and other people just because of the fact that, yes, the kind of people who would come to me for tax advice and other stuff over the years. So this is going to be an educational in content. This is not really a sales webinar. There's some where you're mainly selling. This is primarily educational. Is there going to be an offer at the end? I always like to be transparent. Yes, but it's going to be, by and large, just an opportunity if you think, shit, I need some help on this, to book in, to have a chat. And I'm going to be doing a more advanced follow-on training, but only for clients who book in with me, in which I'm actually going to teach you on the exact tax rules on cryptos, which I'll mention. So this is kind of, I'm going to give you a bit of an overview today for free, and it'll be really damn good content. But the actual rules on tax cryptos is a long webinar. So I kind of going to do that separately. So whether or not you take further steps on what today, I'm sure you'll get value in this webinar by coming along. So does this sound like you? So these are the 3 situations. I might even go ahead and actually number these just to make it a bit better. Just type which one of these best applies to you. Would you say that you're 1, 2, or 3? So 1, Just type in the chat, you own cryptos and have no idea how the tax works, even though you have it. 2, you've got it, but you've never properly structured yourself for cryptos and absolutely shitting yourself as to what the ATO could do to your poor virgin ass. Or 3, you want to buy cryptos and desire to be properly structured from day one. So, yep, okay, this is interesting. Yep, we have a lot of, a bit of a mixture, really. Mixture between 2s and 3s. Probably mainly 2, I'd say. A little bit of 1 and 3. Okay, this is good. So, okay. It always helps me to decide which angle to cover, but definitely sounds like a lot of you have got it. Because you got what's called a pro and a post in terms of rules and things like that. So the big problem is that you've made profits or tend to make it in cryptos. It could make you millions like it has many of my crypto whale clients. But you're prepared by structuring your cryptos before you make the profits, you will end up with a nasty shock courtesy of a gift from the ATO. So you will have that. So a little bit about me. So why am I doing this webinar and what makes me qualified to do this? So yeah, I know I look like I'm 21, but I'm actually a little bit older than 21. I've been around for over 30 years. I've got 10 years experience with the ATO, literally exactly 10 years to the day. I started on the 16th of January and I ended on the 16th of January 10 years later. And if you're wondering why exactly, there were 2 reasons. One was just the timing, because I finished my law degree. And then, of course, I worked out by staying an extra 1 or 2 weeks, I'd get my long service leave. So there you go. That's my honest answer on that one. And since then, I've had about over 20 years, in fact, well over 20 years in private practice. And basically, I've had an accounting firm, a law firm, a financial planning firm. I've been licensed to do all that. At this current moment, I'm not a licensed one. I'm just a qualified one who I more educate and more work as a specialist, a bit like working with GPs, and then they've got a specialist who works with them. So I specialize in offshore and Australian tax planning. I set up a lot of foundations and philanthropic kind of work, very much into overseas investing and structuring and setting up foundations and philanthropy to protect wealth, build a legacy, legally minimize taxes and all that. So I got into cryptos because in 2017, I was proudly espousing on Facebook and everywhere to one who listened to me how crypto was the biggest scam I'd ever seen in my life. And anyone who did that was an idiot. And those who know me know I'm pretty opinionated. And everyone, of course, because I'm a well-known speaker, everyone's like, oh, yeah, man, Warren must know what he's talking about. And then Warren got well and truly humble because in late 2017, I started having crypto guys turn up for structuring advice. At the time, I had an accounting firm running and they'd made some money. When it happened a couple of times, I thought, oh, yeah, just a bit of luck. And then the one that really humbled me was a financial planner, turns up, who'd made 5 million from cryptos. So he had my attention. I'm like, I thought this was a scam. He goes, and all he said was, bro, I can assure you it's not a scam. I've just made 5 million from it. And he said, you actually understand how this technology works? I said, no. And he goes, okay, let me educate you. So he did. And he got me started, got me to buy a Trezor wallet, purchased my first cryptos, and went from there. If that hadn't convinced me enough, 2 months later, I met another client who'd made over 20 million. And then I met another one who'd made a few million. And I'm just sitting there thinking, man, I've been the goose of planet Earth. I can't believe my kind of bigotry has cost me so much. But I learned my lesson, humbled myself, and started and got into it. And I've been very happy that I did. It also, though, me being me, my first thing was, how do I deal with the taxes and the structuring for this? And of course, I'm like, well, hang on a sec. You got all these like hardware wallets. Like, for example, I'll just quickly show you. Like a Trezor wallet, for example. You have a Trezor wallet. Or Ledger wallet, as I've got as well. And you go, well, how the heck do I link this to a trust or company? Like, this is kind of crazy. And so I thought, oh, I know what to do. So I pulled out my legal experience, created some documents, some trust documents and a few others to link it to it. And then I was like, okay, so I need to set up all my stuff in structured with my exchanges. So again, I created what was called bare trust or blind trust document, crypto service agreements, and various other things to do it. And of course, I started to find out that none of my clients had any idea about that, and most accountants didn't. So at the time, I was getting inundated with crypto clients and helping them do this kind of stuff. And so that's kind of my background with crypto. I have done well from it, but not because of any other reason than I've been fortunate enough to have very smart clients who tell me what to do and what not to do. And even in a recent run, when they were guiding me, they told me around March, they said, just hold back for a bit. It's ranging, and until it breaks the range, you're probably going to lose 20 to 30% on your altcoins. And I'm glad I listened to them. So I limited my stuff and things like that. So that's what makes me qualified is I have smart advisors, I have smart experts, and I have smart people around me. I'm probably the dumbest of all of them. But fortunately, like Henry Ford once said, he said, I may be the dumbest person in my business, but I'm surrounded by super smart people who make my life easy. So it's a good thing to be not very intelligent and be surrounded by people smarter than you. That's one of my little rules of life, and what I would encourage all of you to adopt. Who thinks that's a wise philosophy and are happy to adopt that? Who would like to be the dumbest person in their network? Because in that way you grow. If you're the dumbest person in the network, you grow from having smarter people around you, and you keep growing. It's a hard thing for the ego, isn't it? I think most people go, oh, I don't want to be dumb. But yeah, that's something that I learned from a great mentor. I used to be a typical egotistical kind of male who was very big on wanting to look like I was the smartest. I eventually learned being the dumbest was the better way to go. So the sovereign individual is, I kind of want to give a little bit of background on cryptos just to cover this, because it's very important to understand what's driven cryptos and why it's been hard to tax, why the ATO and the governments have had a heck of a lot of difficulty with it. Because cryptos was predicted in this book back in 1995. They actually said that the world would move into digital currencies and cryptos. They actually said cryptocurrencies back in 1995. And they said the reason why is the collapse of the Roman Empire is being mirrored by the West. And so we're in a bit of a collapse, and the more we're collapsing, the more people are going to move digital. Even a couple of days ago, I've had a client pay me from an OCBC offshore bank account to basically into my Australian bank account for a service. It took 2 days to get here, like 2 days. Now, as I said to them, you realize if you did a Bitcoin transfer, you would have got it in 20 minutes. On Ethereum, about 5, 5 or 10. And so cryptos is just speeding everything up. And more banks and the kind of artificial layers, people are going like, what the heck is this? But like any new technology, like when mobiles first came out and internet, cryptos has kind of still been difficult for people to get into. And that's why I've been predicting, I think cryptos is going to have a parabolic run over the next 1 to 3 years. Parabolic, that's what all my advisors reckon. We don't know when, but we're expecting it, simply because that even now, it's still very hard to use cryptos. Like, you still got to go on. I still have difficulty to this day using my MetaMask properly. I have to constantly contact a couple of my advisor friends and get help. I still have difficulties. I still have difficulties with all the Tracer updates. And heaven help, if I have difficulty, most people wouldn't go near it because you've got all these weird keys and stuff like that. But that's changing. I mean, the ETFs with BlackRock being approved and the others, money is starting to pour in. And at the time, we're probably only about 6 months to a year away where buying cryptos will be no different to basically purchasing derivatives or ETF or stocks in the stock market. You'll just go into a BlackRock platform or some other platform or, Saxo Bank and just buy Bitcoin and just buy this and buy that. That's kind of where this is going. And so I'm predicting a fairly large run. And I'm sure that many of you here, because you're probably feeling the same, who here is tending to think, even if you're pessimistic, that just logic tells you it's going to have a pretty good run at some stage in the next 3 months to 3 years. I mean, no one ever knows the timing. Just raise your hand, just give me a why, just send me a love heart, So, yeah, quite a few of you. So, basically, that's where cryptos, in my opinion, are going. And doesn't mean my opinion is right, just to be clear. I'm certainly not giving you financial advice on that one, because the honest truth is, at the moment, it's ranging like heck. And it's pulled back a lot, as we know. And we just don't know when it's going to change. But I'm assuming... But the thing is, it's kind of like getting car insurance. You don't know if and when you're ever going to crash your car, but you certainly don't want to crash it without insurance. And likewise, You certainly don't want to be sitting there with your cryptos having gone up an absolute squillion, and it's all sitting in your own name with no structuring and protection. And that's the reality. I mean, people are frantically running around, and by then it's too late without basically breaking the law and being illegal. And I don't think any of you want to be illegal or go to jail. If you do, you're on the wrong webinar. So this is what's driven cryptos. And unfortunately, this is why people are moving into this financial system, because socialism is where we're moving towards, but a lot of people don't particularly like the idea of putting their cryptocurrencies, just pretty much just giving their money away to people who don't actually work for it. And that's what's also driving this as well. So we don't really learn from history, it seems, and people flee. And as well as moving offshore, becoming non-resident, there's a huge proportion of people starting to do this now. A lot of people are wanting to get into alternative investments and currencies, and I think that's very smart myself. And more than ever, it's important to be sovereign, like to be a sovereign individual. And one of the things that the wealthy are doing more than ever is balanced portfolios. And I'm a big believer, and a lot of wealthy are adamant that cryptos is still a scam. I still have people, but they're starting to change. Some are starting to admit, but well, hang on a second, BlackRock are buying it, maybe we're wrong. So I think crypto is still simply part of this kind of profile, where you've got like precious metals, and it would depend on why you're holding your crypto, whether you're holding it as a long-term investment, whether you're trading it, whether you're just, buying in and out as a speculator. That will always depend. I now, for example, regard Bitcoin and Ethereum in a similar vein to, say, precious metals or, cash or something like a liquid asset, which I just sit there and I hold Bitcoin, Ethereum, or USDT. They're like the three, what I call big, safe haven cryptos. And then there's others that are kind of less so, and they're more like holding stocks or speculative private investments by and large. So again, this is not investment advice, but this is what the wealthy follow. And in Global Wealth Club, we certainly teach clients in our educational modules to follow balanced portfolio and don't get caught up with fads. I mean, don't. And there was a very good book called The Book of Wealth by Bancroft, written about 130 odd years ago, written for the billionaires of the earth. And he pretty much showed that following this methodology I'm showing you here was the way to become a billionaire and become extremely successful. In other words, when I read that, it was kind of like, oh my gosh, you're kind of expecting some amazing book teaching you great secrets, but it didn't really teach much other than following strong, stable, proven stuff and making sure you manage risk. I mean, as an example, I do a lot of sports betting, and I risk manage my bets. And I've been having constant winning days for a while. Today I had a losing day, which was very annoying. I lost at a couple of them. I broke rules and that, but still I'm way, 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 way up because I followed rules. I've managed risk, And it's the same with cryptos and stuff like that. So the blockchain, so to speak, does present very unique taxing challenges. And to understand it, I just want to quickly walk you through the history of cryptos. Now, my presumption is a lot of you already know this. Who here, just write a new, if you're relatively new to cryptos right now. I just want to get an idea, because if just about everyone here knows it well, I'll rush through this. But if it's quite new, I will. If you know the history pretty well, just basically write me, M-E. I'm just trying to get a really good idea as to the kind of people that we've got. That will determine how fast I move through this section. Okay, yeah, a lot of people are relatively experienced, but okay, so I'll kind of walk through it, but I won't labor on this. That's the approach I will take. So basically, I've just put a few obvious ones here. We've got the ATMs. That was one of the start of being able to go and get money out. Cryptos came in. I was actually in the very first cryptos that ever came in. I was in eGold, OzOps, DigiGold back then when it first came out, because I'd read The Sovereign Individual. And then regulators got involved. People got burned. It went on hold for a time. Of course, Bitcoin then began, kept going on. I won't spend too much time on that. 2016, Ethereum started to grow, providing a platform for other cryptos to launch. And the big thing that made a lot of people rich and how I first got into my crypto helping people career was a lot of my clients who were coming to me became millionaires very quickly by getting involved in unregulated ICOs or initial coin offerings. And basically at the time, SEC and ASIC had no idea what they were. And I even remember talking to someone from ASIC in early 2018, and he actually said to me, we really don't understand this all this well, but we just know we're going to have a look at it at some stage. And that was when I knew it would take some time before regulators would get involved. They genuinely didn't understand it. And the ATO wrote an initial policy paper around that time, and the paper was just literally showed that whoever wrote that had no idea how they worked. So I always say that the 2017 thing, I call it a dartboard era. In other words, it wasn't a case of whether you win or lose on the crypto, it's how much you'd win. You just threw it, it was like throwing on the dartboard because anything and everyone was buying it. And this is what a client who made 30 million said to me. He said, you got to understand, but if you think about cryptos like a normal investor, he said, you're going to be head fucked. And he said, this is why the wealthy don't get it. A lot of people don't get it. They don't get that millennials and Generation Y are very pissed off the fact they can't easily buy a home anymore, about the fact that, you know, society, a lot of their dreams are out of reach, unlike us. No homes, hate government, have no desire to pay tax to make others richer when they're having challenges themselves, don't have any desire to work on a job they hate, whereas Generation X's and boomers would just plod along and be survivors. And they like the idea of residual income and love the idea of not being able to reach them. So, and the classic example was Dogcoin. He said someone just puts a picture of a dog and it takes off. Someone does a picture on the Shiba Inu and that takes off. Elon Musk says he likes it, that takes off. Some of the coins that literally, one of them at the time, I can't remember, I think it was Nexus, or one of them was just based on a quantum holographic idea of cryptos where it would actually not exist in anything other than the ether space. That took off. The best crypto I ever did on holochain was on the idea of cryptos eventually becoming holographic. So he said anything that's crazy and makes no sense will usually take off, as long as the idea sounds exciting. And of course, this is when we had Trump win, Le Pen wins, Brexit wins, all kinds of crazy shit was going. And then it ended, and back then, of course, the big players never got into it because Buffett spoke against it. The biggest issue with cryptos, and this is what causes issues with structures and why I'm teaching this stuff, because it's important to understand this. The big reason why people aren't properly structured with cryptos is because it's an absolute head fuck. It certainly was back then. If anything now, it's better than it was. Because, I mean, where do you have your cryptos? I mean, you have them on a Trezor wallet or a Ledger wallet. You have them on a MetaMask. You have them on an exchange, but it doesn't even regulate it. And the biggest reason why managed funds weren't getting approved then was there's no way to get security for fund investors. Like, how do you actually account for cryptos? How do you store them in an accountable, auditable way? How could you allow trading? Because all the ICOs aren't even regulated. So the SEC are like, no one's regulated. Everyone's just doing their own thing. So regulators start getting involved, and then banks and governments also. And we'll know what banks were like. Banks have been very difficult with cryptos, Coinbase as well. Pretty much this is what was going on, and also made it very hard for accountants to structure them, because like, how do you put, for example, Bitcoin in a trust when it's sitting on a Trezor wallet? Because a Trezor wallet is kind of just something that you hold, or MetaMask. And this is what messed with accountants' heads. And I think for me, only because I had my legal background and I ran it by a lawyer for a second opinion, I knew that you could link these through trust documents and service agreements, which is what we've done. So, and there's still a lot of these problems or challenges are around today. Of course, because bit by bit, we started to see changes. And of course, we started to see changes, a little bit more regulatory compliance started to come in. Government started to like blockchain, but then COVID happened, which changed everything yet again. And that kind of sent it down again. Then it had another boom. And then, of course, at that time, regulators started getting really interested and started cracking down and shutting things down. Meanwhile, though, I knew this because in 2022, I had a bit to do with Russia and Ukraine, more to do with the fact that I was dating someone from Russia at the time. The only way I could do any kind of business with Russia was through Bitcoin. It was the only way to do it. I discovered the Baltics, it was taking off. And it's to the fact that you could buy this thing called Payee and digital wallets you could get put on your phone, where you could literally have your bank account showing your bank, your crypto, and your Bitcoin, everything. And that's still the case to this day. So while the West, we've been very sheltered with this and focusing on our concerns, in many countries, it's been taking off and taking off and taking off. And so that was why it's always been, I started to realize this thing isn't going away. It's just that until the security gets sorted out and the regulators get changed. The thing that's changed with this boom and why it's so important to realize this for taxes as well as investing in it is the fact that this boom is very different to anything else that's been to date. See, in the past, it's been Bitcoin halvings have driven it, and then something else, and then something else. This is what I call a going mainstream. And if anyone here familiar with Elliott wave theory, like know about Elliott wave, because the Elliott wave, the 5 waves of a market, you go zoom, 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 and the final wave is when everything goes mainstream. And that's often when the greatest gains are made. Because up until now, people like my mum, a lot of my family members, Mrs. Smith in the street, Mr. Jones somewhere else, they couldn't go in cryptos, and nor would have had any idea how to do it. So it's been a very limited fish pond to go in. But cryptos are going to become available for anyone to go in now that BlackRock and all the big players are getting into. So that's why this mainstream thing, last I saw, one of my crypto advisors, who's one of my clients, he was telling me at one stage $1.5 billion a day was being poured in through BlackRock and the 11 companies that have been approved on the 12th of January this year to have a managed fund. So this is pretty much driving so much money into the market. It's sending up a whole new thing. And that's why my personal opinion, I emphasize, because this is more about structuring and tax than any kind of investing. So I'm not selling any cryptos or selling anything around that. I want to make that really clear. The fact that Bitcoin hasn't dropped much below 60 is extraordinary, considering all the selling off that's happened. That's just because so much money is coming in from big players. So I'd be very surprised if we don't see an extraordinary boom at some stage very soon. But again, when, I don't know. And the truth is, it would only be speculating and only be guessing. But when it moves, it will move fast. And if you're not properly structured, you'll be kicking yourself and you'll be weeping like a baby. So this is what happened recently, as you know, once it hit 73 and didn't go above that, my crypto guides told me it's ranging, just wait for now, just kind of, when it drops down, position a little bit, but just wait. So it's a waiting game right now. So this means it's a good time to structure. This is why I wanted to bring you up to all of this. And ATO are sending out letters like crazy. I mean, I've had one. Anyone here had letters from the ATO or anyone just about, hello, we think you got some cryptos? Anyone? Because now everything's being tracked really, really easily now in Australia and everywhere. So they're sending out letters. So rest assured that they are sending out plenty of letters and they will keep doing it. So so now that it's going more mainstream, this is going to be better returns. It's going to be easier, but it's going to be more easily taxed. Okay, much more easily taxed and easily audited. So if you're going to be in cryptos now, you want to be very compliant and by the book. You really do. You don't want to be doing crazy stuff, because I'm absolutely convinced the ATO are going to have a cleanup financially as a result of what's going on right now. So where are cryptos headed? I've mentioned that already. How do the rich see cryptos? It's changing. It's becoming mainstream. The interesting thing is, someone asked in one of the questions about my mentors. Yeah, look, my mentors don't even sell courses. I've got about a few clients. They don't sell courses and don't mentor people. They're clients who've done very well. And the best crypto investors, I find, they don't sell courses. They just basically do stuff in the background. They said to me, if you ever wanted to do one, which I haven't any interest in doing one, we'll happily kind of guide you in the background. But I've said, I don't particularly want to. I'd rather help on the structuring side. So basically, they'll be seen the same way as other sections of investing and things like that. But there's going to be 4 ways to use cryptos moving forward. Hedge or store of value, like one of the big 3. So like basically Bitcoin, Ethereum, or USDT. So a bit of an alternative ways of going. So I call them the big 3, Bitcoin, Ethereum, USDT. They seem to be the main ones, so to speak. So long-term investing and block term, just buying alts or buying low or mid-market cap coins and getting in there. Arbitrage on exchange fluctuations, or just trading. I've got people who do trading and use bots for short-term income. And all of them are taxed quite differently. That's the thing to realize. Whether you hedge it or long-term invest it, it can be taxed very differently for trading because of the way capital gains tax and income rules actually work. And the ATO have been very clear on record keeping as well. So in terms of what I call the safe portfolio example on cryptos, this is just a pure example. A wealthy person might have a couple of properties. They might have some gold and silver. They might also diversify into cryptocurrencies as well as shares, bond and have some money sitting in cash. And that's kind of where I see a lot of the high wealth going. I think that the bulk of cryptos, with the changing to go mainstream, are going to be more in this safe portfolio example. I think it'll become very similar to buying shares. The majority of shares aren't traded or speculated. They're just bought to hold in portfolios. And I'm predicting over the next 3 months to 3 years, it'll be very similar with Bitcoin, Ethereum, and USDT. So if you really don't know much about it and don't have the time, energy, or desire to get caught up in all of the how to get in and out and make lots of money from it, I honestly think just simply being there for the long term with these currencies, you're going to do very well if you're patient and just leave them. My best crypto gains were just set and forget. I just left them, did what I was told. A few years later, came back and had done very well, literally. So I didn't do much trading. So now we know all that. How do we deal with structuring and looking after our cryptos? So why would we get structured now? The Taxman, it's something that few really think about. I mean, we kind of have it in the back of our mind, but I think there's been this hope with cryptos that kind of I don't really know about it, which I think people have started to work out that it is. And in terms of when do you structure, I think the answer is pretty clear. Basically like car insurance or whatever else. The worst time to get insurance for a car is basically after you've crashed your car. That's like the last time you want to get it. So you can't really go and change it later on. So basically, you want to be structured before they're made. If you already have made it, well, all you can really do is structure yourself now so the next move you're not going to get your ass banged. And then we do what we can for the past. And there are, planning strategies, there's creative stuff you can do legally. But by and large, there's what I call the sins you committed before you got born again and the ones after. The ones you committed before getting born again, unfortunately, unlike Christianity, don't get easily expunged, although we can make a difference. But by setting things up in future, we can basically make sure that you don't have anywhere near as much moving forward. So the time to structure is to get it done like ASAP, yesterday, in record time. Otherwise, because once you've earned the money, you can't go back and change it, at least not legally. I mean, I have people come to me going, what can I do now? And I'm like, you can't do a lot if you've just made a squillion and done nothing about it. You just got to hope either break the law or, bite the bullet. I remember once when I made a mistake with my structuring, which was silly of me considering I knew better, but I just did. I mucked up some paperwork. I remember agonizing over it. I just decided, screw it. I'll just pay some tax. I'll just pay the taxes, bite the bullet for being dumb, and set myself up properly moving forward. And the best thing I ever did, So it's good to kind of get things cleaned up, done properly. And there's so much you can do within the law, I can assure you. But the reality is the Taxman is the big ass elephant that's in the room. And you want to make sure that you're keeping the wealth that you're making by having it really well structured. And because cryptos is so difficult because of the fact that it's on Trezors and Nanos and Ledgers and basically on MetaMasks and, almost anything other than exchange, when it does sit on the exchange, not all exchanges until recently were easily able to open a company account. And I don't know if anyone's ever tried a trust account, but that can be even worse because KYC becomes tenfold worse. So there's a lot of nuances to structuring properly this area. There really is. And the elephant can squash you if you don't do things correctly. And I like what Kerry Packer said in 1991. This is one of my favorite quotes of all time. He goes, and if you got to read the full context. If you ever want to have some amusement, go back and search this up in YouTube and watch the conference he had when he was at a parliamentary inquiry. And he pretty much, they were trying to basically embarrass him for not paying much taxes. He's like, hey, he goes, I don't basically have any problems in minimizing my taxes because the way you guys spend it, you're a bunch of absolute galahs. And he literally left a journalist humiliated. It was a wonderful, wonderful, entertaining view, like watching Trump at press conferences when he was president. A bit of entertainment. Okay, so let's have a look at the overall on tax on cryptocurrencies. Now, before we do, I'll just see if there's any questions that relate to the subject. So yeah, Lisa asked about who my mentors in crypto and coach others. No, they don't coach others. They just basically help me. Do you think the ATO will simplify how to do crypto taxes? That would be very nice if they did. My guess is once it becomes more mainstream and more regulated, but the wheels turn very, very slowly at the ATO. Things like that. So yeah, there's a few questions here which not really sure to answer them about crypto on exchanges. I mean, you don't own it as your keys and all on crypto. Well, the ATO have a different view. So there's some good theories on crypto, and then there's the practical ones or whatever else. I do think this has been the problem for the ATO is technically where you make a good point, Pete, is that cryptos are not really owned by anyone. And I remember saying back in 2018, technically, until it's converted to fiat, is it really currency? Now, the ATO have said straight up they think it is, hasn't been tested in court yet, and for now they're well and truly saying that. And now with the way, and of course, it comes down to why you're owning the cryptos. This is what makes it really confusing. Are you owning it as investing or using it for currency? Because that changes the tax yet again. So things like that. So let's just kind of move. Okay, so who's following so far? General feedback, are you enjoying it? Getting much out of this? We're now going to get to some nitty gritty. So let's start to go through nitty gritty. Great. So far, if you're not following, let me know because I'll cover some things a bit more. Look, the ATO are starting to declare war on this and send out letters and do a crackdown. Can they find you? And these are important questions. I looked into this very carefully because I heard all kinds of rumors, and I got a very good IT expert. He's one of my clients who's extremely good. He's a hacker and everything. And I asked him back in 2021 whether the ATO or governments could track it. He said without any hesitation, easily, he goes, I could track it. I said, really? He goes, oh, absolutely. He goes, there's various algorithms and things you can do. He goes, from what we understand, the blockchain is actually on a centralized server in New York. He goes, we've had no problem when we've had to track transactions being able to do it because he's worked in various projects. He said, you just algorithm, when there's the same address going together, you do a few little computer programs. Yeah, he goes, we can easily track stuff. So this was 3 years ago, mind you. And also most people use exchanges as well, and they're going to more and more. And of course, CoinSpot are well and truly going to let the ATO know what's going on, and as well as Coinbase and CoinJar and everyone else. Of course, when fiat ends in your bank account, mind you, that's easier said than done. Banks are being quite funny about cryptos and ending up in your bank account and things like that. So a lot of banks still don't do it in Australia. Stronger anti-money laundering laws and overseas information exchange, offshore notices they can do. I just tell people in this brave new world, you really are better off to just assume that nothing is really that private if someone wants to find out about you. And and always ask yourself, can I sleep at night with what I'm doing? And I think no one wants to be living in stress, staying awake at night, hoping they don't get caught. I remember going through a very, very aggressive audit from the tax planning thing. I've never been so pleased that I was clearly structured. And it was quite funny. This is many years ago, because you could see they were convinced that I was some offshore money laundering guy because of what I taught in webinars. They worked out that I had a Seychelles company and stuff like that. And I was just very open with them. And by the time they finished, they said, so you're actually not really doing any tax avoidance, right? I'm like, no. And they go, well, okay, so why have you got it? Oh, I said, asset protection. And I said a few other things. And they go, okay, well, we don't really care about that. That's fine then. And then end up giving them career advice. The point I'm making is you want to structure yourself properly. No money is worth living in stress and potentially going to jail. Just if you agree, just type a Y. That you're committed to doing this legally and within the law. Because if you want to do something different to that, you're at the wrong webinar. You know, there's plenty of people who will teach you very strange strategies to do it. And I'm certainly not one of those. Okay, is tax planning worth it? That's the point. You tell me. I like what Peter Martin said here in the Sydney Morning Herald when he examined the 56 richest $1 million earners in Australia. He found the following. So you tell me. This is pretty much the results, and you can search it up yourself online. A similar study was also done in 2021 and found almost identical results by someone else. But this is what basically came up. So, and the cost of not tax planning, I always like to show people just in some actual numbers over 10 years in a set and forget investment, okay? Or a set and forget thing where you're doing it and you're earning income or whatever else, basically. So this is potentially what the difference that you can actually make over a period of time. So it can make a huge difference in how you are structured. So ultimately, what you're willing to pay your tax advisors and how far you're willing to go, which decides how much you pay. That's pretty much the system. And I remember when I was a lawyer, I went through a bit of disillusionment because I was in shock. I remember one day saying to a legal advisor mentor, because I joined law originally because I was a truth lover. And I remember saying, pretty much it seems the more corrupt you are, the easier it is. Whereas if you try and be a good person, you get shafted and you get laughed. He goes, pretty much. And I noticed that very corrupt people got away with literally murder and not going to jail. Very good people went to jail because they would try and be helpful and try and do the right thing. And that's kind of like one of the things I've even done with clients and with my son is teaching them how to act if you ever get audited or if you ever get basically, you know, an aggressive tax planning or you get a regulatory investigation for something you're doing, how you handle it. Because pretty much as a ASIC prosecutor once told me, we know the first meeting and the first correspondence is critical. They said 99% of successful prosecutions are what happens in the first meeting, the first letter, and in the first few days. They said, because people are panicking and and we just want them to talk because they will give stuff away. They said, once people know their rights and know to keep their mouth shut and exercise their right to remain silent, we know we're going to fight in our hands and there's not a lot we can do and we usually lose. And that's something I taught my sons as well. If they ever get charged with a criminal offence, you just shut your mouth. And when you're told you've got the right to remain silent, you pretty much say to them, thank you very much. I will exercise that right. And as soon as my lawyer is present, I'll talk to you. And that one tip I've given you will be the greatest tip you'll ever get if you get into trouble and will be worth $10,000 and I'll give you my bank account details. Joking, but I'm telling you that's the kind of stuff that one thing I have learned in life is you've got to know how to deal with things and problems when they come up. And you definitely want to make sure you're correctly and legally structured. So, I mean, here's a really good example. Have a look at Uber. I mean, 9 companies, no tax. Sanitarium, which belongs to Seventh-day Adventist Church. They are $1 billion profit company, pay no tax because they're owned by the church, which is a tax-exempt approved foundation. And the Rich 200 as well, based on what I showed you with the study by Peter Martin. Who's kind of blown away by those facts, by the way? Who's kind of like going, holy mother of God, just kind of really hitting you how much you're kind of caught in a web of illusion where basically the whole system is kind of working to make you believe you've got to do things you don't have to do. Just type a Y if you're getting any kind of insight or awakening through this. You may not, some of you may already know this, but do they have all their income overseas? No, they don't. Most of them actually don't, Rory. That's what's interesting. This is an illusion. In fact, I always tell people, if you want to create the greatest risk of living in Australia of getting targeted by government, you basically hide your money overseas. That's the biggest thing that governments target heavily. There's plenty of ways that the rich do other than that. So within the law. So, you know, most clients I've taught, we've done zero tax planning for cryptos and things like that. So they'll see you as a license to basically print money. So I'm just going to give you a bit of an example. This kind of was a real life client many, many years ago I had. I obviously changed the name. I've kind of changed the figures around, but this is basically what he's dealing with. So he didn't really structure himself. If he actually put himself in a structure, he'd pay a maximum of 25% tax. If he waited for 12 months, he'd cut his tax bill. There's even other structures he could have done even better in terms of how he'd done it. So this is a simple example of someone who paid at least twice as much tax as he needed to, simply because he wasn't correctly structured. So let's change the facts slightly. If we cash out, he'll pay double the tax. So if we waited, we cut the tax in half. So basically, it's the timing of the sale and whether to move everything into a structure right now. So you really want to be considering your timing. You want to be considering your structuring. There's a lot of factors you want to be considering when you're planning your taxes. And that's something that the wealthy know all too well. And that's why they pay experts to plan everything correctly. I think you would all agree. Who would agree that by me having crypto experts to guide me in what I invest in, or just give me tips, my friends, I do better than if I try to do it myself. And of course, with all of them, I look after them. I don't get it for nothing. I give them stuff back. But who thinks it's smart that I've got an expert to guide me? Just type a Y. It's smart. It's much smarter and much easier to follow that path. And that's kind of how you want to approach and deal with this. So another example, so Jenny buys some Ethereum. Let's say this is a more recent example. She's thinking about selling. I've used AU dollars rather than US, even though that can be a bit of a head fuck. If she sells now, she makes a 20K profit. She'll pay tax rate. If we waited until after that date, her tax rate cuts by 50% because of 12-month exemption and things like that. She needs to work out the timing of sale. There's pain now, but going later on. And she wants to consider, is it really better for her moving forward to move everything into a structure right now? And if so, what structure should she be moving into? You know, like e.g., she could do a family trust. It's one. She might be wanting to build a foundation for a legacy, a company. It would depend. Each has its pros and cons. So basically, a foundation is tax exempt, but of course there's other things, and you've got to know why you're doing a foundation. And that, by the way, is what a lot of the wealthy do. They set up legal foundations, approved, exempt, not private, but public foundations, and they use it for their philanthropy because wealthy people generally are doing it, and they structure it in that way. And like the Seventh-day Adventists has shown, they run their whole businesses off their foundation, and that's why they legally don't pay taxes. They've even been subject to a Senate inquiry who said very, very annoyed there's nothing they can do about it because they're playing directly within the law. And I'm not saying go ahead and do that. You've always got to get personal advice. I'm just giving you one of many examples of what goes on. Others, of course, use offshore companies if they've got international business. Others use family trusts and use them in a certain way. There's various things that one can actually do. The moral of the story, which I hope you're starting to get by now, is keeping it as important as making it. Because imagine if the thing with you keep your wealth and you structure properly, you may not do very well as compared to some, but you may still make a lot of money because you really don't pay a lot of taxes and you're structured well and you protect your wealth. Whereas you can end up with all kinds of problems with the money you make because you're not correctly structured. So I always regard it like I do pole dancing as to keep myself fit and strong. And when I learned, one of the biggest things I was taught was safety. And same as my first crypto mentor taught me, but safety is number one. How to protect your cryptos, to avoid being scammed, how to protect security from people trying to do phishing scams on you. So the first 4 hours of training I got was how to protect my cryptos. With Pole, I got a lot of training how to protect my body, how to gradually move into it, how to recover, how to integrate properly, how to not fall on my head and seriously injure myself when I do tricks, you know, all that kind of stuff. So it's been a slower path for me to be good at it, but it's been a safe path. I've had no real injuries, apart from a couple of shoulders and others, because I've been doing it safely. And likewise, you can build a lot of wealth and be financially independent in the next 2 years. And I honestly believe the next 3 years, if you're smart, can set up a lot of people for life. I'm not saying I'm right, but I think with the AI stocks and crypto and the cryptos, I mean, we're already seeing some amazing stuff with AI stocks and coins, I'm sure. And I mean, who here is into artificial intelligence stocks and coins and seeing the extraordinary gains over the last, months or so? I'm just curious. Anyone into that? Just type a Y if you've kind of been fortunate enough to be a recipient on the artificial intelligence stuff. Not really anyone? That's a bit of a shame. Again, this is stuff you've got to learn and study. But I do believe that if you're willing to put the work in, master this kind of stuff, and structure yourself tax-wise, you can have a very good future ahead of you. Although I think we're heading for a major economic collapse, usually before any economic collapse is what's called melt-ups or big runs and opportunities to do very well. So again, I'm not saying I'm right. I'm just saying putting in the hard work and doing this kind of stuff is better than kind of just not doing anything at all. So you want to protect your cryptos for the taxman and everyone else. And the thing is, there are, unfortunately, some very unusual challenges you will face with your taxes. So the ATO, as an example, let's just kind of have a bit of a squizzle as to what they say about it. So they pretty much say, these are what the ATO said. They said you got to keep records. And so if you go to an accountant, you want to keep really good records. I keep really good records of what I do, for example. So my sports betting, I keep good records, because records help you understand what you've done. Cryptos, we have a very detailed spreadsheet that we do, and how we're managing them. A very, very detailed spreadsheet. We make sure we have everything kept together and done and looked after. There can also be taxation consequences in a foreign country if you're overseas doing it as well. So just a few little points to help you get started. These are what I call my little guidepost thing to give you a bit of a guide and stuff like that. So setting up these are what I call the 3 biggest issues with tax, to try and give you a bit of guidance to get started. So the best time to do it is before you buy the cryptos, because if you buy it before, you don't have any tax consequences. So let's just say that you open an exchange account or something like that. If you buy some cryptos or whatever else, that's the ideal one. And I'll go into some of those more difficult issues in a minute about how you deal with that one. Or you move the cryptos into a structure. So you move them in now before they go up. Now here is my magic secret sauce little thing I'm about to share with you, okay? Something that I know from being a lawyer in the past. So, of course, how do you do it? How do you basically have your crypto account in something other than your own name? So I'm just about to make your life very easy for you. Number one, and the obvious one, is you have a crypto exchange and you open an account in the structure, okay, which is all fine. So let's just say that you have a Coinbase account. So that's an example. Like, basically, so an exchange would be like Coinbase, CoinSpot. They're just examples of exchanges, which basically you can basically work with. So you can open an account in the structure. However, what happens if you've got a crypto exchange in your own name, or a particular crypto exchange that you're using? Like, there's all kinds of weird ones like Hotbit and FatBTC. There's a whole lot of others around. Most of them now let you go in, but let's say that you have that situation, or it's just going to be a nightmare to actually get it into an exchange. Is there a way around it? Again, you've always got to get your own advice, but based on my knowledge and been having confirmed by a lawyer, you can actually set up paperwork to link the coins to your structure. So, for example, let's say there's a Coinbase account in your own name. You might do up a special trust or company minute, and then you do a bare trust agreement or service agreement, and it depends on what the lawyer says and different things like that. We've created paperwork, which I've had done by a lawyer, which I ran it by him. He approved it, which we have made available to our clients based on what our lawyer's given. Basically, a trust or company minute or foundation just saying that, hey, the crypto's owned in Warren's CoinSpot account in the name of Warren Stewart Black. Now you know my middle name. Basically is the cryptos that are owned in that one belong to the JYK Trust or the WLB Foundation or WLB Company. And equally, how does Warren or anyone link my crypto sitting in this or my MetaMask? Same deal. You have a company, trust, or foundation minute, which says very clearly that the wallet, which has been purchased, which has got coins on this one, belongs to this. And then to make sure that that's legally done, some kind of bare trust agreement saying that the CoinSpot exchange or the wallet or whatever else is held on a bare trust or on a service agreement on behalf of the structure. So that's a way that I've basically found to do it. Now, again, that teaching that is a whole webinar in itself. And we've actually put together videos for existing clients on that. But that's the basic idea. So what you're doing is either A, opening it up in a crypto exchange. So you might open it up in the WB, exchange or whatever else. Or B, you might have some paperwork done up. And the paperwork will basically, link your crypto coins to your structures if basically they're owned in that particular, if they're an exchange in your own name and you really are having either difficulties opening one up for a structure, a company, or you just haven't got time at the moment, or you've got an online wallet or a Nexus, or that you've got like a wallet, like a, what is it, like a MetaMask wallet, you've got a Trezor, you've got a Nano Ledger, that kind of stuff. So I know this is pretty technical. I've tried to make it as easy as I can for you to understand that. Can people follow that pretty well? Like, who finds that very useful? That's one of the, by the way, who finds that really helpful? This is one of the great little things you can do. And the other one, and of course, again, this is something that we work with lawyers and accountants, and we can put this all together with you if you don't have someone who can do it for you. But yeah, if you invest in speculate in cryptos and sell, you get the 50% discount for more than 12 months. So this is the thing to understand as a general rule. If you invest or speculate in cryptos and you're selling and you sell them, in other words, you're holding them basically, and speculate by hodl. Hodl, of course, means, holding, long-term buying and holding, and sell them. You pay CGT on profits. Whereas if you trade or mine cryptos, you don't pay CGT, but instead pay income tax on profits, and you don't get basically the 12 months. So these are what I call the 3 simple rules of cryptos that I've given for you. And there's a whole lot of other stuff, which, like I said, can keep you literally going forever. So and like I said, there's a whole big thing which goes through and teaches you different stuff, which I've done, which a webinar I'll be doing for my clients, just in terms of understanding the different things. And to give you a bit of an idea, so there's some very unusual tax issues that come up that we're going to be covering in our advanced training. Is whether for each buy and sell, every time you do a crypto transaction, is there a separate CGT event? The answer potentially yes, which can create a nightmare. So that's one. And then, of course, is it money, or is it a property, or is it an investment? And that's another important question. And again, all these questions are like 15-minute explanations. And then what happens if clients pay you in Bitcoin or crypto of any kind for your products or services? And again, all this can create other issues. The ATO have said stuff, and you want to make sure that you're prepared if you're basically doing that. So I will give you a quick little checklist about setting up your structures to help you out. You set it up before buying cryptos. Ideally, you have 3 issues consider doing this. Basically, like, have you set up a structure beforehand? If not, will there be CGT events when moving it into a structure? And is your crypto account in the correct name or linked to it? So very simply, again, have you set it up? You've got to work out what type of structure that you can do. Feel free to screenshot this if you want. And even we'll actually quickly take you back to the other slide after this in case you want to. I'm not going to sit here claiming all kinds of weird IP because I know you can do it anyway. But type of structure, what's the best one? Basically the timing of it as well. And this is the next one, CGT events. Are there gains which will trigger if you transfer into a structure, which is really important? CGT events or income, so which will transfer into a structure, either CGT or income gains. Like I said, it depends on whether you're speculator, miner, or what you're doing. So you can see it's anything but simple. And is your crypto account in the correct name, or is it linked correctly to a structure? That's also very important as well to do it. So this is a really important checklist which you want to be following to go ahead and do that. Like I said, I promised I'd go back and hold this for about 20 seconds in case anyone wants to take a picture of that one. And then from there, we've got the unusual issues slide, which I've already looked at, but this is the one as well for you to hold. And then after this, I'm going to go through and finish like what things can you do. So I've kind of given you a bit of an idea of the problem. Now we're going to have a look at, before we take questions and complete, so we finish in the 90 minutes, what we will be doing. Okay, who here is following this and enjoying this and getting some and finding this very useful? Yeah, stressful and useful. Yes, this is the elephant in the room, the issue that no one really wants to face, but you need to. So let's have a bit of a look. I've already mentioned this already. I'll just quickly So this is the kind of, once again, the one I showed you previously about the ways you can deal with the crypto. Wendy, great advice. Natasha, thanks for sharing your knowledge. Yeah, no, I'm happy to do it. I've learned that you want to kind of teach good stuff, and then, yeah, look, at the end of the day, you always want to give good value, and then I find you'll always have a few clients who want to come and work with us. So that's the idea. So who is already thinking, just type a Y, that you'd like to have a chat with us and get some guidance on this? Just type a Y if you're kind of thinking that. A few of you, yeah, it's excellent. So basically, let's just keep moving through this now and having a bit of a decent look. And like a lot of this stuff here, the last one I'm going to look at here before we go on to the thing here is the tax implications are all very different depending on why you hold them. Buy and hold, you treat it as an investor. It's kind of funny teaching this stuff. This takes me back to days I used to work for the ATO and it used to be a bit like that. So you basically, you get 50% discount if hold more than 12 months. Consider a family trust, definitely not a company, or a foundation. So you basically want a family trust or foundation. I'm not a big fan of companies for cryptos for various reasons, because you will not get your capital gains tax discount. Then speculating is the same. Trading, you don't get the capital gains discounts. You're more treated as though you're running a business and things like that. And mining is the same as trading if you're a crypto miner. So 1 and 2 are treated one way, 3 and 4 are treated another way. And that's basically how that all works. So ultimately, the reason for holding them, which also means having a minute or paperwork as to why you purchased them. And if you do both buying and holding and trading, you may want to consider having two different structures, one for buying and holding and one for trading. And the reason why is the ATO otherwise is going to turn around and lump everything in the same boat, and they'll do it to their advantage. And I've seen them do it when I used to work as an auditor, because the burden of proof is on you. So if you do both buying and holding and trading, you really have to make sure your record keeping and structuring separates what you're doing. Otherwise, you're going to get whacked with way more tax than you would otherwise. That's a very helpful tip I'm giving you there, but you want to pay some attention to. Is there anyone here who does both buying and holding and trading? Just type a me if that's you. Because if that's the case, you are going to probably want to look at your record keeping and having maybe, or possibly even having a couple of structures. Because trading is treated as income like running a business. So it's very important that you do this. So now, the other one I mentioned here is a separate event. So that's why you want to keep records for everything that you're doing with your cryptos. Very, very important. So to give you a bit of an idea of what record keeping do you have to have? Well, the ATO has given some guidance, fortunately, very kindly of them, in their deep desire to make sure that they can take as much of your money as they possibly can to fund Albo's private jets and make sure that he and the politicians can live the style of luxury they are accustomed to, is to data the transactions. Yes, so CoinSpot won't let you have two accounts, correct, Ian. So this is why the paperwork things I'm doing and why planning this stuff is critical, because yes, you're correct. A lot of them you won't let you have two accounts. So you may need to either have separate minutes done up and certainly separate ledger records and transactions and things like that. So the devil's in the detail when it comes to this. This is what the ATO have said, and things like that. So when the ATO, the only structure in the world other than the French, we're proven guilty over proven innocent. Yeah, correct. That's kind of how the system works. So these are the kind of things that the ATO have suggested that you should be keeping. Purchase, exchange, all this kind of stuff. So you certainly want to be making sure that you're following all these rules and things like that. So now here's where the fun begins. Who wants to learn some weapons to fight back against the ATO and regulators? Good. If there's no whys, I'm just going to end the webinar and say thank you for coming. So yeah, hell yes, Priscilla, that's good. Absolutely. Who's ready to kick ass and absolutely do this? Good. Let's have some engagement. Yeah, Wendy, army, absolutely. You bet, baby. If you're really clean, right, you bet, baby. Come on, let's have some fun here. You bet, baby. If you say that, you've really got my attention. Let's go, baby. You betcha. Beautiful. So, number one, not everyone wants to do this, but this is a good one. Just become a non-resident. This can solve a lot of stuff. Like, as a resident, you pay tax on everything. As a non-resident, Wendy, fuck no, I like it dirty. I better chat to Warwick, Wendy. Travis, so sexy. So you only pay tax on income directly sourced in Australia as a non-resident. So becoming a non-resident can solve a lot of woes, and a lot of people are doing that now. So you can get your taxes down to zero, to as low as 0%, usually around, 5 to 15%, by the time you've done that. It's just the way to go. It's a big thing, but a lot of people are doing. So to become a non-resident, very important that, again, you understand what the law tells you, not what your taxi driver told you or your Uber driver or your mate when you're out having a drink or down on the internet. You got to actually settle your residency correctly. And I strongly always recommend that you also have a letter from your accountant on residency, because this protects, this is what I call the hindsight rule. The ATO, I mean, I'm sure none of you can remember all that well what you were doing 4 years ago. And the reality is with most audits is that 4 years ago, basically, yeah, that's what they're looking at 2, 3, 4 years ago. So a letter showing your intentions at the time is worth its weight in gold in an audit. And I'm telling you from experience, having been an auditor and representing clients in the past when I used to be a lawyer. So you also have to actually settle yourself somewhere. The new tax ruling, you know, it's very, very clear. You know, new tax ruling, TR, you know, 2023-1 clearly says this. Like, there's no question. It says that you have to have this. Otherwise, as far as they're concerned, by default, you are an Australian resident, you know. And then you can discuss options like that. You know, you can discuss like Panama, you know, you can look at, you know, Bali, Thailand, Panama, Malta, Costa Rica, you know, basically places like that, Ukraine. Sorry, I have to say that's just my dark humor. Depending on where you want a place to stay long-term or be a traveler. But yeah, we could always help you go and settle in one of those 6 places or many others. Companies, basically, you know, generally not so great as a rule if you're living in Australia, because you don't get the CGT discount for hodling. So if you're trading or mining cryptos, a company may be okay, but not so okay, you know, basically if you're not doing that stuff. You know, so basically, i.e., you know, whether a hodler, you know, basically in which case no, or a trader, miner, in which case yes, you know, in which case you're going to have what's called a maybe. So I'm just written that in there for you. So yeah, offshore companies, again, don't waste your time if you're living in Australia as a resident. The laws are very strict and they look really closely at this. I actually have a task force now, the Australian Crime Commission, the ACIC, and a couple of others, but specifically looking at people setting up offshore companies to skirt taxes and do money laundering. It's one of the biggest projects going on right now across Australia. So no dumb question, Gina. Dumb question is at 183 days per year. Yeah, that's a different test again. So 183 days, basically, you know, you want to be more than 183 days outside of Australia as a rule. That is correct. So companies is another way of doing it. Basically, you know, if you are moving offshore, you can do Hong Kong, Singapore, Seychelles. If you're living outside of Australia, things like that. Trust is very common, and trust in Australia can work very well if you're living in Australia. As you will see here, you can split your income between beneficiaries. You get a discount. Only beneficiaries pay tax, not the trust. You control but don't own the assets. So you can split income. So it's a really good way to go to basically legally minimize your taxes. So yeah, if all else fails with your cryptos, whatever you do, have a trust, you know, if you're not, rather than your own name, that because you will save taxes and you will have some protection if anyone sues you, or suddenly people are claiming your cryptos can be available in a lawsuit. If you're correctly structured, it will protect it. So family trust, I don't go too much into this because super funds is another way you can own cryptos. And of course, especially if you're retirement age, generally this is now the domain of licensed accountants well and truly. They've got all kinds of laws. And so I've stayed away from a lot of this, but for someone who's over 55, hitting 60, they can be really good because, you know, or even 45, 50, because over 60 is going to be tax-free up to a certain amount. So that is another option for you to own your cryptos in as well. Basically, the taxes are fairly low, subject, of course, to the cap, which you've got. I think it's actually 1.9 million now. That shows how much I don't do super as much anymore. But yeah, so basically, It's very common, but you just got to make sure you comply with the insane rules that exist with these. You have to have an investment strategy which covers your, which must cover your cryptos. So with a super fund, you have to have that. You must you can't do all my clever stuff I've shown you with the bare trust and that. You must open the exchange account in the super fund name. So having a Trezor or Nano wallet, you can't really do that without literally giving an auditor a seizure and lose all their hair on you. So yeah, if you want to go through super, you're better off to own a proper exchange account and do it all that. Make sure your investment strategy, make sure that custodian issues are met. So these are just issues for you to alert to. Like I said, I would teach this in the more advanced training when I'm working with clients. This is more just a general webinar. But make sure you seek advice from a licensed, superannuation accountant before doing this. That's what I strongly suggest. Finally, foundations is a really great one. The wealth you've been using this a very long time, as I showed you. If you genuinely are a philanthropist, you can absolutely, as well as doing philanthropy, you can actually build your cryptos and you won't pay taxes legally, as long as you meet the foundation's rules. I'm talking about a public foundation, and what I mean by a public foundation is it basically, just to explain what I mean by public foundation, means approved by ACNC and also by ATO. So I've just written that into the slides for you, just so you know what I mean. Approved by ACNC and also by the ATO for income tax exemption. And it's relatively easy to get. And I tell people, why would you not do that and go private when you can get all done legally? You can also get a government grants for foundations. You can get $10,000 a month from Google and free advertising. You can get stamp duty and land tax exemptions in certain situations. It's crazy, So this is a very popular way with people doing it who have got philanthropic tendencies and they want to make a real difference with their money. So don't use it as a pure tax dodge. You'll get your ass walloped. But if you're doing it and you genuinely are somebody who likes to help others, there's all kinds of really cool foundations that you can set up, So basically you've got these ones here. One of the most popular ones is what's called a private auxiliary fund. This is what's called a passive foundation. And what I mean by passive is that you can pretty much invest monies and then tax-free, and then you have to give away 5% every year towards charity, So it's basically a really good fund to build tax-free wealth and leave a legacy. So that's another way people are doing it, and for cryptos and things like that. But ultimately, you want to be taking charge of your money and secure your future. Okay, now time for questions. I'm just going to fill my water up, everyone. I'll be back in a minute, and that will give you a chance to put your questions in the chat. So, the financial advisor is the most suited industry in the world. At what level is it classed not a hobby? Well, yeah, I don't think cryptos, I think the ATO made it very clear they'll never consider cryptos a hobby. So, yeah, I think it's arguable if you're just buying it, for a little bit of just for a little bit of, buying a quick game or playing a casino game or something like that. That's about the only time it would fall into that, because you can do online casinos. So, Deb, if you have some crypto now, how can it be moved into a company account or trust? Yes, so that was why I was mentioning before about the trust minutes and the basic bare trust minutes and basically the crypto service agreement and things like that, Deb. So yeah, you definitely want to get some specialist advice to do it, but that's what you're looking at doing it, see what tax consequences you've got in doing it and things like that. Marie asked if crypto can be set up in a super fund. Yes, it can be, as I mentioned, subject to strict rules. Does anyone have an experience of Binance? Yeah, we don't really, not going to get caught into that with Binance in terms of suspending accounts or whatever. Yeah, I don't do much with Binance myself, unfortunately. So Pat says, just a comment, with service agreements, like personal crypto agreement by trust, my accountant said a service agreement not worth the paper it's written on, it's not arm's length. Yeah, well, that's kind of like for me, asking a doctor to advise on something a specialist does. There's some things I'm open, but they're plain wrong. I've spoken to a couple of lawyers. Legally, this is 100% correct. The key is you just got to make sure the agreement is done arm's length. And at the end of the day, it's not even like you're doing anything dodgy. You're simply basically creating an agreement, doing a link legally. So, yeah, I mean, my experience is accountants have no idea when it comes to this kind of stuff. So completely could not disagree more strongly with your accountant if I tried. And that's all I can say on that. Matt, I want to be a non-resident, but have too many family ties in Australia to do so. Yep, understandable. That's a very common one. If you put your crypto into a trust, what is the percentage to this, or better to sell fiat and buy back again? Yeah, I'm not quite sure how to answer that. I mean, if you put your crypto into a trust, I mean, there'd be the taxes that you pay and things like that, which would be your normal marginal tax rates. And like I mentioned before, it would depend on whether you're running a business, or whether you're sort of hodling, or whether you're speculating, or whether you're doing trading, whether you pay CGT or whatever. Is Coinly software still good to use? I don't know it. I don't use it. Best to speak to an accountant who deals with software. I more look at the bigger pictures, but probably. You mentioned transferring existing crypto to a structure. Is there a threshold when TGT becomes payable? Look, it becomes payable pretty much from the moment you buy it and it goes up. It's just that whether you get a 50% discount or not depends how long you hold it. But yeah, there is some kind of $10,000 personal use exemption, but that's limited to certain situations. So general rule is no, but there is this special $10,000 personal use for very low investments and things like that. Matt asked, how do I know if I'm classified as a trader? That the ATO pretty much said it's a question of fact, and we can't give you a set answer. So I can only quote what they're saying, Matt. All they say is the more you do, the more systematic, the more likely we'll consider you a trader, and how long you hold for and things like that. If I want to trade as a business, can I use the exchange account in my own name? Possibly, as I mentioned. If you want to do the crypto service agreement, minutes and trust minutes, but again, you need specialist advice before doing it to make sure it's done correctly and properly. Tasha, end of financial year, if you don't have to pay tax, you don't sell or trade and just hold. Most likely not. It would depend on your situation. How long can you hold crypto before it becomes an investment? I'm not sure what you mean by that. But generally, it's a question of fact. If you're doing lots of transactions, just buy a few and that's all you do and sell them and not much. The longer you hold it, the more likely it will be considered an investment for tax purposes. Do I recommend a tax accountant? No, I don't. Not on a live free webinar. Do you have to pay CGT on trading like Bitcoin to a stable coin? Well, this is the thing. My view is you should be no, but the ATO say yes. So me and the ATO have a different view on it. So the ATO says, yes, you have to pay CGT or even income tax if you're doing trading as a regular thing. Can you repeat what you said about Australian Foundation having cryptos? I said many things about that. Just basically that it was legally tax-free if you're setting up a foundation and doing philanthropic work. So your question will be a bit more specific. Do you have to be earning a specific level of income in your day job, plus what you're earning crypto to benefit from a trust, assuming they set up in fees? I mean, if you're only earning about 20 grand a year or 50 grand a year and then only making 20K crypto, it may not make much difference at all. So I have what's called the 100K rule. Generally under 100K, the benefits are dubious, but over 100K, they're normally there. And I'll just say to you that, as what happened to one of my friends, he made that awful mistake because he didn't think he's making enough money. And then he got caught out and he literally made 1.8 million in 30 days unexpectedly. And he ended up with a gigantic tax bill because he hadn't gone ahead and done it. He's running to me in frantic, like, can I structure now? I said, no, I told you that you probably would have been wise to do it. So would you put crypto as an investor, not a trader, in the same trust as a trust you have set up for precious metals? Possibly, yes. You would, again, need proper advice to look at what you're doing and why you're buying the metals, but possibly, yes. Can you expand on a 10K personal use exemption? No, not in this webinar. I don't want to get too caught up in the technical issues. I'm more on those kind of ones. Just generally, it's just available and one to be looked at if you've got less than 10,000 as to whether you qualify. How to best contact a knowledgeable quality lawyer? Yeah, I'm not sure on that one. In Sydney, I wouldn't have a clue, Deb, sorry. Okay, so some of these questions are getting a bit too specific. So the ones that are very, very specific, and that I'm going to look at more general ones now because we're running out of time. What is the best way to get money into exchanges? Look, a bank's blocking transfer. Yeah, look, it's still a bit weird with this kind of one. It's a good question, Madeline, because yeah, look, I had a strange situation with my bank where they wouldn't let me make a transfer because they said they're putting it in the crypto. So I just did it from a different account and did a smaller amount, and they accepted it, and they've been accepting it ever since. So yeah, I'm banks are kind of weird with it. I find CoinSpot very good. I don't recommend an exchange. I just have found them myself. I like dealing with them. Banks can block them. You've got to be a bit careful how you do it. From my experience, still, it's just in the dark ages a little bit in Australia, unfortunately, when it comes to this. In your mind, what is the best structure to develop to help a cause whilst keeping spiritual intact? A foundation, definitely, Wendy, on that one. Zoe, how's it viewed tax-wise? You've made large purchases of a Visa card linked to a crypto account. Oh, look, the ATO will say straight out, if you made profits on the crypto account, it'll be taxable. That's straightforward, really, unfortunately. So, okay, so what's next? Let's just go through this to finish off, because I appreciate now we've gone 90 minutes and things like that. So you have three choices from here. Who's enjoyed the webinar and very happy that I did this and at least feel you got one or two things out of it? Just raise your hand or say yes, or, you know, tell me I look like I'm 21 years old, something like that. And I love you forever. Okay, so you have three choices. Number one is hope that it just works out. Just do what everyone else is doing and just live in hope. And that's what most people do. They just live in hope and just hope to God that things work out. And you can do that. Just blindly follow the masses. I really hope that no one's going to do that. So who here would be interested anyway in finding out a little bit more how it would involve working with us? Just say a Y or raise it. Just say yes or me or something like that. No obligation, just a bit of an idea. Yep, Y. Oh, quite a few. Well, yeah, I would definitely suggest you get some guidance from me or someone. You'd be crazy not to, especially with what I think we're about to get a good boom. Second one is, if you have an accountant who knows what they're doing and they're excellent, then great, see them. My guess is you probably don't, otherwise you wouldn't be here. If you had one, you probably wouldn't waste your time listening to me. Number three is get some specialist help. In other words, have a chat with someone to take advantage of the crypto boom and structure it yourself correctly. So to start, these are actually some stark realities which I like to always show, but are based on stats. You know, generally, on average, around 4% truly become free and are willing to take the action. That's been something that we've noticed in our statistical stuff. So if you resonate with getting some help and are willing to invest in it, you've got two choices. Number one is you can basically, you know, have a private session for one-off advice, but which we charge you for, obviously. But what we would do is we do give a free assessment for you to have a chat with us. In other words, to find out what the right fit for you is. So this is how you can book in and have a chat. So like I said, you know, there's a questionnaire you have to complete. We want to know a little bit more about your situation, but this is what you would actually, you know, do that. So, yes, so basically this one here, you have a fit, we would send you something before the meeting and just go through with you and just ask questions and see if we can help you. So that's basically the idea. So who here would like to basically, you know, get that, so to speak, would actually like to have a bit of a discussion and get to find out the option? Just type a Y. Keep in mind, if you those who are paid clients, existing clients, or do that, are also going to get you know, once I do our advanced training, I'm happy to do that for clients who have signed up and work with us. So the idea is that, just to give you a bit of an idea, once you do this, you don't just get one-off advice and told to piss off. You know, we do have some good ongoing training. I make sure that I want to we're creating some even better videos. We've got really good video training for clients on how to do your paperwork. We have templates from a lawyer we can give you. We've got, I'm going to be doing an advanced webinar, as I said, the next month or so to go through all the more detailed questions on crypto that you've asked for existing clients. So yeah, so being frank, this webinar was to give you a bit of an idea, give you a kickstart. You can go away and do it yourself and hopefully get some results for you. If you really want some help and those who are willing to invest and do this, and rest assured that you'll be well looked after. So for some reason my thing has been weird. So all you need to basically do is go along and go to our Global Wealth Club page and complete the inquiry form. And just to make it nice and easy for you to do, this is the page over here in the far right corner. You can click inquire and just go ahead and write this out, and you'll be asked some, and you'll get that. You'll be given a questionnaire to complete, and then we can go ahead and have a bit of a chat with you. And like I said, I've got no interest in charging you if I don't think we can help you. You won't pay, you know. Some of you have noticed are already existing, you know, clients who've paid a fair bit already. Obviously, I'm more than happy to have a chat with you about this. No issue at all. And give you access to our templates if you're already a paid existing client. So have a look into this one. We do also have mentoring and ongoing. For those of you who kind of want to be part of our groups, you know, like where we do investment education and we educate on the stuff and go into more depth on everything, you know, on the wealth matrix, on how cryptos really work, stuff like that. Occasionally get my guys just to come and share. We certainly don't give any advice in this area. We stay well away from that. But we happily educate and give people the benefits of our wisdom. And for that same kind of deal, you just, if any of that interests you, just feel free to book in, have a chat with us. I say it's 30 minutes, but, you know, if it goes a bit longer, that's fine. So if you're planning to book in for a call with me or with us, just type me, just so I get a bit of an idea. So in case we're going to get inundated. Okay, getting a few me's. Oh, okay, a few more than I thought. Okay. Either it's my good looks or you enjoyed the webinar. Hopefully it's both. So, okay, so questions, feel free to email here if you've got a question. A reason I don't give my own private one is because the chances are it will get missed because I get a few. I'm going to put mine there as well so you can CC me. But whatever you do, make sure you send the support, because if you send to me without CCing me, you know, send straight to me about having support involved, good chance it will be missed just because I get emails. And if I get a lot of emails, I just kind of start to ignore them after a while. So, okay. Final questions before we end? If not, I want to thank you guys for listening to me. I do appreciate you giving up your valuable time. Thank you for coming, everyone. Appreciate your time and look forward to seeing all of you or some of you at some stage. Bye for now.